Hey, good afternoon, everyone. It's Coach Chris from AccuTrader.net coming at you at 2 p.m. Central Daylight Time on Monday, September 9th, 2024. The federal disclosures are in the link down below. I am not a financial advisor. This video should not be construed as financial advice of any kind. It is purely for educational purposes only. Now, having said that, 2 p.m., the chart you're looking at is a 5-minute chart of the MNQ September expiration futures. I told you in the video yesterday, my weekly video, that expect some fireworks today, and they came out swinging. Pre-market was already up over 100 points, and then they continued to push this thing way up. I mean, it was really, and I thought they were going to take it right to the moon and take back all of the points they lost Friday. Well, they started out strong, but then at around 9 o'clock-ish, we had a big reversal, then another big up move, and then lunchtime of all times, 12:30-ish, we had another big move down. On my screen, I have the AccuTrader.net system up here. It consists of various things. First of all, this green and red line down here indicates the direction of the market up above. This right bar, the market is still open, and that's why you'll see things bouncing around here a little bit, is also an indication of which way the market is going at the moment. And this little line is an indicator that will go up on here depending on the intensity of the move. You then have the grayish area, which is a cloud, which is a band that price, the average price should remain in. Once it starts to deviate too far from that band, it's going to want to retract back to this red basis line in the middle. These white candles are kind of neutral, to be considered neutral candles. They're inside of this band, and otherwise they're not Heiken-Ashi candles or anything like that. They're just normal candlesticks. The way that the system works is you will get either a green or a red box with an arrow in it, which is the recommended entry into the market. And then you'll see here above the chart on the up, that little red X, if there is, and now over here on the down, it was a green X below the market, that is your recommended first take profit zone. This is a 5-minute chart. I prefer to trade this on the 5-minute chart as things are much smoother. You get much bigger trades, and you get less false positive entry signals. When you're on the 1 minute or pre-market and there's not a lot of volume, you will get false indicators on this because it's looking for a momentum trade, and the signal will shoot to buy, but there just won't be any follow through. Like here, you can see we got the buy signal, and you can see how this thing rips to the upside. Lot of momentum. This is at 8:10 a.m. I'm just going to move this out of our way so I can show you. So here is the 5-minute candle when the order or the entry signal fired. Okay. What we do is we enter on this candle. Now this signal can go off and on while this candle is forming, simply because it may trigger, and then the market may pull back while the candle is forming and not meet our entry criteria. But once this is illuminated solid green for a minute or more, and or this 5-minute candle closes, that's your green light then to enter. So if we look at that trade, even if we entered at the top of the candle, which you can see the wick starts right down there and goes up here, this trade at the take profit 1 was 58 points, and ultimately got up to 110 points. Now, like I've said many times, you're not going to probably get all 110 points, but that is the size of the move. And assuming you traded one micro contract, that would be a $200 trade. If you got out here at the first take profit, that would be a $100 trade. Your stop loss goes at the edge of this band below or above where the entry signal is, or 25 points, whichever is greater. And in this case, come on, it was 27 points. So in that case, you can go to 25-point stop loss. So it's a minimum of a 2 reward to 1 credit. And if you got up all the way up here, that's a 4 to 1. That's what's the beauty of this system. That's why you can be, I'm running a high percentage rate. Let's just say that. But you can run as low as a 30% success rate at a 2 to 1 reward to risk and still be profitable. Okay? So that's the other beauty of it. So I'm looking for bigger trades and longer duration trades. That's why I'm trading the 5-minute. Much more relaxing way to trade. You can put the order on, put your stop loss on, and then once it gets near target, trail it manually. Let a runner go if you want. However you want to manage it, that's strictly up to you and your own risk tolerance. Now, I just want to point out one thing. This box here is not part of the system. This is something I drew in. This was an order block that formed this morning at the top of this run up on the 5-minute. You can see where that wick went way up. That's what we call a sweep of liquidity. And then this candle pulled down. So that's important because I want to show you when this comes up. What an order block is an area where they will block, and when I say they, I'm talking about big institutions, algos, and the big money players. Let's just say that. Money makers. So an order block means that they do not want price going above that area. And if price gets into there, very often it will reject at the edge of the order block, but it won't go much higher than this wick here if it gets back up to that. But this liquidity sweep here, this big candle, what that's indicative of is they will sweep this liquidity to the upside like this, establish that level, and then they'll use that liquidity to then send the market down to a new low. Okay? It's why they do it, you'll have to study that on your own. There's a lot of different theories on it. But you'll notice once it sweeps that liquidity, look at how quickly it does, how quickly it goes all the way to the bottom. If you look at here on the way up, it went up, consolidated, went up, consolidated, and went up. Where here, there was only one little area of consolidation right in here, but otherwise it went from way up there to way down there. So, and along the way, we got a sell signal. Right here at 9:30 a.m., the algo fired again. Entry here. Your stop loss on this would have been a little bigger. They're saying a 45-point stop loss. You really normally, I would say if you went 30 to 40, you'd be more than fine. But look what you get in reward. 125 points. So you'll see, even if we put a 40-point stop loss, we've still got a 3 reward to 1 risk on the trade. So this is what this is capable of doing. If you look at here, let me move this down a little bit so you can see. So we got 1, 2, 3, 4 100-plus point trades all before 2 in the afternoon. Now, I wouldn't recommend trading anymore. I think the big moves are done for the day anyway, so I wouldn't really recommend doing much anymore. Now, they could surprise me. There's no real news tomorrow, so I don't anticipate a lot of shenanigans going on anymore in the market today, but like I said, you never know. So there was the second trade. Now the third trade is here at 10 to 11. So they brought it all the way down. They swept liquidity. Some people call this turtle soup down here, where you see them with these wicks down below testing and sucking up liquidity. And sure enough, now what are they going to do? They're going to bring this up all the way back up to this order block. Look at, so this is what we call on the way down distribution. You'll hear these terms. And Why they call it that, you'll have to research yourself. I know why, but this is part of your learning process. So we go distribution, we sweep liquidity on the bottom. Guess what? Now it's time to go all the way back up. So distribution, accumulation, and look where they got. This box was drawn at 9:05 in the morning after these two candles printed. I could see clearly this was an order block, and so I marked it on the calendar, and looky, where did they bring price up, huh? Right to there with a few wicks ahead. So this is, some people call it manipulation. Let's just call it manipulation. That's the best word I have for it. They're not really manipulating the market in the sense that, hey, let's really do some crazy stuff. Yes, they are trying to get people off sides in a way, but this is just what their algos do. You've got distribution, accumulation, and it goes right back up to the top of that order block. But you'll notice how it respects it. It will not go higher. Now, on some days it will. I have to tell you, there are some days where they don't respect it. And that has to do with, in my opinion, that there's either a different set of algos running, or it's market makers hedging and positioning themselves based on option activity, either zero DTE options or other options activity that they need to hedge themselves against. And what they will do is they will use futures to help hedge themselves. And so if they are really off sides on something, they will run certain algorithms if that's the case, they will not respect these types of conditions. And that's where we can really get in trouble, because we go, well, there's no way they're going to get above that order block. And what do? They push and go up another 100 points. But today, they were really respecting the points of interest that we had established on the chart. And then we weren't done for the day. Here at 12:40 of all times, we get another sell trigger, and we're fairly close to the top of the cloud here. So you're going to want to put at least a 25-point stop loss, enter the trade, first take profit. That's that green is 88 points. Ultimately goes to 130 points. I mean, 4 just beautiful, beautiful trades. Now, if you look, let me just draw a line here once just to illustrate something. So let's just say this is the bottom of the candle here. Hard to draw these straight for some reason. Let me clone that. Okay. So you'll see we never really, as long as you entered before here, you never really encountered any drawdown on the trade. And even when you did, depending on where you entered, it wouldn't have been much at all. It would have been this candle pulled back about halfway, which the next candle very often does after getting a candle like this. And then this one pulled back a little ways, but then it was down and off to the races. Now let's just see on these other ones what happened. So put this one here at the entry point, okay? And you can see here it was off to the races. Never encountered any drawdown at all. Here, same thing, big down and then off to the races. And then let's just look at the first trade here. Going here. Okay, so on this one, you may have gone to either break even or slightly negative, depending on where you would have entered. But you can see the edge of the cloud is way down here. So, I mean, you never really got into any threatening situation. And this is the other thing I like about the way that this system is designed. I like when you put on a trade, you get almost immediate confirmation that you're going in the right direction. Okay. And it does, because this is really based on momentum, so that when it triggers, you usually do get a thrust in that direction. And you can see here today what I'm talking about of how beautiful this system worked for us today. Now, normally I don't get 4 excellent trades this good. There's just simply not enough hours in the day. It really surprised me we got 4. But you can usually count on 2 to 3 almost every day as long as we get this up and down motion like this. On trending days, you may not get all 4. So that is the beauty of this system, in my opinion. So, hey, I got to run. I went over already. Hey, Marcus, if you're watching this, can you check your email? I sent you a couple emails and I haven't heard back from you. You'll know who you are. So thanks so much for watching. If you guys don't have this system, I'd really appreciate if you'd pick it up. I'll really help you out in any way I can, installing it or whatever you need, and then training you on it. So the link is in the description below. It's just accutrader.net. So thanks everyone. Thanks all my new subscribers, by the way. Channel's growing nicely. And I hope I'm really helping some people out here, because I know a lot of people are struggling financially and trying to pass prop firms. And these prop firms put a lot of rules in place that stand in our way of achieving our financial freedom that we're looking for. And if you don't have a good trading system, let me tell you right now, don't even bother with the prop firms, because they are putting so many rules in place that you need. Just YOLOing it and buying and praying is not going to get you to a funding stage. It's just not going to. You need a consistent method to get 20, 30, 40, 50 points out of the market with minimal risk, because of the trailing drawdown that many of these companies use. So that's just my 2 cents. Hey, Coach Chris signing off. Thanks again, everyone. Talk to you soon.